The LBMA is telling us something very big about silver. China has big news about silver. We've also got some crazy information when it comes to gold. Guys, everywhere we look, it seems like we are heading towards much higher prices for silver and gold. But when the LBMA, the London Bullion Market Association, right, the original manipulators of the silver price and the gold price say something very good, very optimistic, very bullish about the silver price, we want to pay attention. First, I want to say, you pay attention right now. We really appreciate you being here. It's a big deal when you join us in the basement. We love our little club, our big club here, right? Basement dwellers. Thank you. Please subscribe to the channel, give the video a thumbs up, and super chat, super thanks, PayPal donations, any of that stuff. Never expected, always appreciated. Let's go out to the LBMA. Oh, wait a minute. There's something even more shocking about this story. This comes from Yahoo Finance and Bloomberg. Yes, that Bloomberg, like the leading financial news company in the world. They start out talking about gold, but there's something hidden in here, and this is causing earthquakes throughout the silver industry. I first learned about this on Wall Street Silver last night, but now everybody's reporting this, and it's breaking news, and it's good news. Bloomberg says the gold industry sees bullion surging 10% in a year to a record high. Don't forget, this is really about silver, but we got to cover gold first. From Bloomberg, gold is expected to climb to record highs over the next year, according to a survey of the bullion industry at a major annual gathering. I wonder if that leading bullion industry there it is right there, delegates at the London Bullion Market Association event, also known as the LBMA in Miami, expect the precious metal to rise to $2,900 an ounce by late October next year, about 10% above its current levels. The number is based on average forecasts from traders, refiners, and miners who were surveyed over 2 days at the LBMA conference. Guys, this is the LBMA. I know most people in the silver sector, gold sector have let's just say a certain level of distaste for the LBMA. We know they've manipulated the price of metals for decades and decades. So when they say something very optimistic about, number one, gold, that's a big deal. But when they say something very optimistic about silver, which we're going to get to here in a second, that's even a bigger deal. The green section there talks about how gold is one of the strongest performing commodities, yada, yada. We know that. Bolstered by the Federal Reserve shift or rate cuts. Non-yielding gold tends to perform better in a low-rate environment, blah, blah, blah. Investors are increasingly turning attention to the U.S. presidential election just a few weeks. In an interview, Donald Trump defended plans for dramatic increase in tariffs, vowed more direct consultation with the Fed, and dismissed concerns over the federal deficit. Nobody cares about the national debt. We'll go down that path later. Here's where it gets interesting, buried at the bottom of this story. Okay, silver will gain more than 40% in the coming year to reach $45 an ounce, according to the survey. Let me ask you, my fellow basement dwellers, did we read that correctly? That's the LBMA. They're having their big major conference. They're talking to all the traders. They're talking to all the members. They're asking them, where do you see gold? We hear whatever they said, 2,900. When asked about silver, and of course they buried it at the bottom of the article, right? The LBMA convention, the consensus is that we will see $45 silver in 2025. And not only is that a big deal because it's coming from the LBMA, right? But it's being reported by Bloomberg and being covered on Yahoo Finance. So that's something that a lot of people are getting very excited about. I think it spells, right? It tells us that's the LBMA saying this, the London Bullion Market Association. I've said that 9 times now. It's a big deal, and we'll keep an eye on where that goes. Now, what about China? Right? This new news first. This story, I believe, was first broke by the Oriental Ghost on Twitter, but I've got an article here from the Silver Academy saying now that China will pay above spot for silver and is buying silver concentrate directly from Mexico, Peru, and Bolivia. It says by paying above the spot price for silver concentrate from Peru, Mexico, and Bolivia, they are also achieving another significant objective. U.S. weapons and aerospace manufacturers have to stand in line. This is a big deal that China, right, probably one of the biggest importers, right, one of the biggest demand sources for silver, is bypassing the COMEX and the LBMA. This was in the tweet that I saw yesterday from the Oriental Ghost. And the part that we want to look at, let me make sure I've got you guys up there, which I do. Oh, here we go. Is down here. This gives all the data, how, China is importing more silver than they're exporting, consuming a lot of silver. Okay, but right here where my little hourglass is in the second paragraph, second sentence. According to trading partners, Peru, Mexico, and Bolivia are still the main importers of silver concentrate in China. The combined import volume in the first three of the first three countries accounts for 77% of the total, or an increase of 3% over the same period from last year. So what we have here is China, importing silver directly, silver concentrate, not refined silver. They're refining it themselves. That's what the big deal is. They are bypassing the COMEX and the LBMA, and they're going straight to the source, buying the concentrate from Peru, Bolivia, and Mexico. It says this development has significant implications for the silver market, particularly as it suggests a shift away from traditional trading platforms such as the COMEX. By sourcing concentrate directly, China is effectively bypassing commodity exchanges, which would diminish their influence on price discovery. We've already seen massive divergences or disconnect between paper prices and the physical silver market. Now we have more complications on how silver prices are determined. The robust demand driving the imports is strategically fueled by China's thriving solar panel and electric vehicle industries. This is not just a trend, but a deliberate part of China's economic strategy. By paying above spot for silver concentrate from Peru, Mexico, and Bolivia, they're also achieving another significant objective. U.S. weapons and aerospace manufacturers now have to stand in line behind China. Overall, while these direct imports may not have immediate effect on the spot price, right? It's not going to change it overnight. They highlight the evolving dynamics in the global silver market and underscore China's growing role as a key consumer and influencer in the precious metal space. China's domestic silver production is in decline. Well, so is Mexico's, right? And with this industrial demand, especially for solar panels, the country is aggressively securing overseas silver supplies. This strategic stockpiling, coupled with China's massive consumption needs, pose serious implications for the global silver market. Okay, there's some sources. I think some of this may have came from the J Post as well. So what is that telling us? What is the LBMA telling us? The London Bullion Market Association is telling us $45 silver next year. What do they know? Do they know? They know what's going on. They know that China, for instance, and what about India? We're not even talking about India, who's imported what, like 250 million ounces, 240 million ounces of silver so far this year. Why is that important? Well, I'll give you one big example why just India alone is important, because the whole world, the whole mining sector in the entire world only produces 800 million ounces. You have India sucking in 230, 250 million of that 800. And we have China now who's saying, have fun, LBMA, have fun, COMEX. We're going to get our silver directly from the world's biggest silver producers, Mexico, Bolivia, Peru. And then, right, another reason why this is so critical is we've got the world, and in particular the United States, military industrial complex that is sucking in silver. Who knows how much? Do you know that in World War II, they estimated that the U.S. industry would need 200 million ounces? This was in 1940, when silver was not used as predominantly in weapons as it is today. So who knows how much silver is being demanded by the U.S. It's absolutely crazy. But let's go check. Let's go ahead and check our friend. Let's just see what the silver price looks like in China right now. And then we'll take a look and see what it looks like here in the United States. So here we are at our friend, the Oriental Ghost, with his daily update, October 17th, 2024. There is silver, AG. That's the periodic table abbreviation for silver. And the SGE, and we all know what that stands for, basement dwellers, the Shanghai Gold Exchange. And we emphasize the high because the price in Shanghai always seems to be higher. In China, the silver price is always higher. And that's important because the Shanghai Gold Exchange market is a physical market. It's not a paper market like the COMEX and the LBMA, right? It's not unicorn fart dust. If you want to trade silver on the Shanghai Gold Exchange, you pretty much got to have the silver before you can sell it. Whereas in the United States and in London, oh, it's like fantasy land. You can sell silver that you don't even own. I mean, it's crazy. It's called naked shorting. We've seen reports lately, right? And why is this important? It's very important because all of that silver that they sell, right? And we've had reports lately that there's like 600 million plus ounce short position in the paper markets. All that silver needs to be bought back at some point. And when they naked short it, they don't even borrow it they just sell it. They just say, I'm selling silver. I can sell as much silver as I want. I can sell silver into infinity until, let me look you in the eye for this one, until, right, the physical market for gold, the physical market for silver, when it overcomes the paper market, the electronic market, the unicorn fart dust market, the make-believe fantasy land COMEX market, where you can sell 400 ounces of silver, right? Where you can leverage things up 100 to 1, 400 to 1, whatever you want to do, make believe. At some point, right, the market always wins. Market fundamentals always eventually win out, right? And force true price discovery, real price discovery to happen. Let's go back to the Oriental Ghost. I digress. Okay, so on the Shanghai Gold Exchange, silver closed at $34.10 per ounce. Let's go. So this morning we're going to talk about these retail sales numbers are insane. Okay, we'll talk about that in a minute. But let's go out to our friends at Pimbex and check on the silver price. Okay. Well, this is not updated. Who knows? Silver took it on the chin this morning. Not the Chinese chin, the chin, because supposedly we had some good retail sales numbers. We're going to talk about that. It's just absolutely infuriates me. But let's press the Pimbex button here. And okay, silver's up 8 cents. Gold up $13. Oh my gosh. Unbelievable. Hey, I want to say thank you to channel sponsor Pimbex. Here we are on their website. As you can see, you can click on this little button that says silver. You can go look at all the different silver and gold coins that are available. They've sponsored Ron's Basement for over a year. Please, right? This is made possible because of the generous support of our sponsors. But even more important than that, you have an opportunity with Pimbex to get gold, silver, platinum group metals at prices that are ultra competitive. Okay, number one. Number two, they got a great selection. But number three, what's most important is that it's a company that I believe I trust, and I believe you can trust. Now, I never will tell you what to do, but you need to discover that for yourself. But it's nice for me. I like to think of it as like a one-stop shop. Like if I want to buy silver, and this has been over the last 1 year plus, I know I can go there. Sure, I will check prices, right? Right? Everybody does, right? But I can always feel secure with Pimbex that I'm getting like a very ultra competitive price, usually significantly lower than some of these other big online bullion dealers. And it's like a one-stop shop. I know I can trust them. I place the order, and the box shows up, and it's wrapped like Fort Knox. And it's always a little heavier than if I'd bought from one of the other big online bullion dealers. It's a little heavier because there's a little extra silver in there because I used the money I saved to buy an extra ounce or two of silver. So please support our friends at Pimbex. And if you ever decide that you want to convert an IRA into precious metals, you're going to get the speech. It's going to take 20 seconds. Please take your time. Look at all your different options. Talk to a number of different people. For your own benefit, consider talking to the guys at Pimbex. All right. And then at the end of the day, make your decision, but make sure you factor in how many actual ounces of silver or gold you're going to get with that amount of money that you may be making the decision to convert from into precious metals with an IRA. All right, guys, let's go. This is there's so much. Oh, hold on. Let's have a quick drink of water. Turn the mic back on. Thank you for being here. Thanks for being part of this. Don't forget, right? You're welcome here. You're part of the group. Thank you. I read all the comments. Please, realize that what you say is important. And we really have a great opportunity together to learn from each other on this journey, this precious metals journey that we're on. Now, let's go. Let's talk about how crazy things are in the gold and silver. We just saw gold's up $13. Silver's up a little bit right now. Guys, it's unbelievable how things have changed within the precious metals market. Okay. Let me go up here. This is a series of tweets from the Kobisi letter. Gold is back in record territory. This was from yesterday. The US dollar. Okay. Even as everything is changing, all the old relationships, and this guy points out a number of these major changes that we're seeing right now. The first one, and we talked about this yesterday, the US dollar has strengthened 3% since September 30th, and gold prices are still positive this month. Okay, here. Next. He says here, it's rare to see a time where the U.S. dollar and gold trade together. A stronger U.S. dollar makes gold go down, weaker as it becomes more expensive. Over the last few weeks, both gold and the DXY, which is the dollar, are up over 2%. If you told a Wall Street trader that the dollar was going to be up 2%, over a 2 or 3 week period, or up 3%, they would have bet the farm that gold would be down, but that's not the case. This is a new paradigm, a new environment for the precious metals. Okay. Next one. One of the biggest arguments for higher gold was the recent Fed pivot. Okay. Remember the Fed was going to cut by 50 basis points. Over the last 3 weeks, a 50 basis point rate cut in November has been completely priced out. This is the CME FedWatch tool that we go look at. Odds of no rate cut, okay, are now nearing almost 10%. even with a pullback in rate cut expectations, gold is soaring. So the dollar's soaring, gold is soaring, right? That should not be happening. That traditionally should not be the case. Rate cut expectations are coming down. That should make gold go down, but that's not the case. Gold is going up, okay? Here we have, and you know what? Let's go out there and take a quick look and see how it got affected this morning. We'll go to the CME. Let's see what the big money is betting right now the Fed will do. So the next FOMC meeting, the next time we'll hear from Jerome Powell will be in exactly 3 weeks from today. Okay. Let's go down though and see where the rate cut odds are right now. Okay. So we're still about the same range. There's a 90% chance that we're going to get a quarter point cut, and a 10% chance, 9% chance, a 90% chance of a quarter point cut, a 9% chance that there will be no cut, because there's the current rate. That is a massive, again, right? The price of gold should be, and silver should be killing. Meanwhile, recession worries have calmed as the unemployment rate fell, right? We're getting the strong economic data. So wait till we talk about the retail sales number this morning. It's maddening, okay? We got the retail sales number strong, right? So if with a strong economy, that should mean the Fed would be less likely to lower rates, and that would mean that the price of gold should be going down. Meanwhile, he says gold prices continue to push higher, even as a primary catalyst has turned bearish. And he says the answer has been in technical analysis. So we got 3 major components that are telling us the silver price should be lower, right? We should be at 26, 20. If the old rules of the game, right, were still in place, right? Between good employment data, good retail sales like we got this morning, the fact that the market is now expecting the Fed won't be as aggressively cutting rates, the dollar going up, all these things should be torpedoing the precious metals prices, silver and gold, but they're not. We are in a new, guys, I hope you feel the warmth that's coming from me. We are in a new paradigm, a new land for silver and gold. We talked about it all the way back in December, almost a year ago now. That's when it really started to shift. But now, guess what? Do you guys hear that? The sheep? The sheeple. The other 99%. The 99%, 99 out of 100 people that don't know what you know, little by little, they're starting to wake up. And if just 2 out of 100 of those sheeple wake up and decide, oh yeah, maybe I should buy some silver or gold, because you know what? Think about this. You know why this is so important? Let me explain to you why that when the sheeple, I'll do it one more time for you, sure. When they start to wake up and they're like, I got sheared, baby. Jerome Powell sheared me. When the people wake up and realize that their dollar is going down in value, okay, there's a reason why. There's reasons why they're going to come running to get in the lifeboat, swimming furiously to get into the lifeboat that you and I in the current world, welcome to the club, basement dwellers, the current world of gold and silver investors are already in the lifeboat. They're going to be swimming furiously, okay? And we're going to be paddling away. Like we're not, but the reasons why they're going to come, right? They're not going to want to put their money in the stock market. The stock market's going to crash. I'm going to show you that here in a little bit. They're not going to want to put their money into real estate because the real estate market, I can't believe, right? I've lived in this house, 20 years. It's like triple now of what I bought it for. It's overpriced. The real estate, they're not going to put their money. They're not. Remember, this is so exciting, right? There's $6.5 trillion $6.5 trillion in money market accounts and that's safe money, my friends. Those are all your neighbors, right? They didn't want to put that money in the stock market. They didn't want to put it in the real estate market. They wanted it to be safe. That's their rat hole money. That's what my dad used to always when I was a kid. I got the best dad in the world, born in 1940, still kicking, all right? And he would always say, you got to have some rat hole money, right? Set aside. And that's what those people, that's $6.5 trillion of rat hole money. So when they start to wake up and realize that Jerome is shearing them, and they're like, what am I going to do with my money in the money market account's only making 3%? What am I going to do? I don't know what to do with that money. Oh, well, they're not going to put it in the stock market. No, it's going to be crashing. Real estate, no. Bonds, no. I mean, what are they going to buy? Yeah, they're all going to wake up at once, and they're going to come running for silver and gold. That's what I think will happen. And doesn't it make sense? It makes sense to me, right? Made sense to us long before it made sense to them. And sometimes it can be a little painful being early. But guys, do you feel it? Like, this is new. Let's go back out to Pembex. I hope it didn't go down. All right. Take a deep breath. All right. There's the Pembex magic button. Let's press it. Okay. Silver's down a penny. That's all right. We'll come back. We'll make it go up. Come on, basement dwellers. We need silver to go up. Let's, okay. General market crash. The market's going to crash. Let's go on that. The market's going to crash, and silver and gold are going to crash with it. Do you buy off on that? All right. The stock market's going to crash. The real estate market's going to crash, and silver and gold are going to crash with it. That's what everybody says. Everybody, even most people in the silver and gold community. I don't agree with that. And I'm going to explain to you why I don't agree with that. Okay. All right. But when you listen to any knowledgeable person of the stock market, they'll say when the stock market crashes, gold and silver are going to crash because it happened in 2008 and because it happened whatever in 2020. And it did, right? Well, guess what, Buttercup? What did we just talk about? Back in 2008, also when the dollar went up in value, gold went down. Well, that ain't happening right now. That whole relationship has been broke off. That got divorced. All these long-standing relationships between precious metals and the dollar, precious metals and interest rate expectations. We are in a new land, okay? But the stock market is going to crash. And I think the opposite. We could see maybe there'll be a really quick downdraft in gold and silver, like when we had that Japanese stock market crash back in August, whatever. I remember we were driving back from Wisconsin, the family vacation, right? And I'm looking at stuff, and like the world was ending in one day. And what did they do? This is a perfect example of what to expect. Okay. We don't even know for sure what they did, but they did something lickety split, super quick to fix it. That had to do with liquidity, that had to do with the dollar going down. And how did gold and silver? Yeah, it dropped, I think, that day a little bit, but came bouncing. If we do get a drawdown when the market crashes, or if, right? I don't have an absolute crystal ball. We may not even realize the market. The market could be crashing right now. The Fed is reacting super fast because the system is super delicate. And we got so many examples right now. This is insane. This is absolute insanity what's going on out there. Okay. Wrong one. There we go. Okay. The most mind-blowing chart you'll see today. Get ready to have your mind blown. NVIDIA, right? The AI company now has a market cap. Okay. That means a valuation. The company is valued. I take every share of stock and multiply it by the number of, the value of all the shares of the stock of NVIDIA combined is equal to almost 12% of the total United States GDP. I need to look at you for this one, basement dwellers. Does that make sense to you? One company that we hadn't even heard of 5 years ago? Most of us? How can one company that we hadn't heard of 5 years ago suddenly be worth 12% of our national GDP? That does not compute. Sorry, no compute. No compute. No, default problem. Okay, big, major problem. This is big issues. I mean, we are in trouble. To put this in perspective, even at the peak of the dot-com bubble, Cisco, we remember them, that was just 5%, half of the U.S. GDP, and that was a massive bubble. In other words, NVIDIA is now more than double what Cisco was. Over 10 trillion of market cap has been created since AI hype began. And sure, I think, AI is cool, but look at this. Look at this chart. This is NVIDIA's enterprise value as a percent of GDP. I mean, the red line. It is crazy. There's Cisco. I mean, it's just absolutely nuts. What about Warren Buffett? What about Warren Buffett, right? Warren Buffett, the world's smartest investor. What does he have to say about what's going on? Well, who cares what Warren Buffett has to say? You're as smart as Warren Buffett. I've told you that. I'm as smart, right? He's done really well investing, right? Who cares what he has to say? What is Warren Buffett doing? That's what is he doing? We don't listen to what Jerome Powell at the Fed. Oh, shoot. I'm knocking stuff over everywhere this morning. We don't listen to what these people say. We watch with our eyes, right? Our eyes are much more important. What are they doing? What's Warren Buffett doing? Oh, hey, thank you, cool Ken. Super chat. Thank you, guys. Appreciate that, cool Ken TTTTTG. Thank you. He's selling all of his stocks. He sold a bunch of Apple stock, a lot of Apple. He sold a ton of Bank of America. Why is he selling all this Bank of America stock? But this is even more. Here's one more. I'll show you why. Warren's selling everything, because the Warren Buffett indicator hits 199%. It's probably at 200% after today. The highest level in history. Not highest level since 2004. No, the highest level in history. Surpassing the dot-com bubble and the global financial crisis. You might be wondering, what is the Warren Buffett indicator? Well, I'm going to take you on a little journey and quickly explain that to you. It's the Wilshire 5000 index. So that's the combination of, I think, the 5,000, whatever. You can Google it. It's 5,000 companies. All right, it's an index of 5,000 big publicly traded companies. It's, I think, the biggest index. You got like the S&P 500, which is the 500 biggest. You've got the Dow Jones Industrial Average, which is 100. You got the NASDAQ 100. You got whatever, right? This is the biggie. This is more comprehensive than any of the indexes. So it combines all 5,000 of these stocks and compares it to the GDP, the gross domestic product. We are over here, guys, 200%. Look back in the year 2000. Remember the tech bubble when it burst? It was below 150. Remember 2007? It was half of where it is now. We are in such a crazy market bubble, and all the sheeple are asleep at the wheel. Right? They think, wow, everything's fine. My 401k went up. Right? And it has. Congratulations to all you people that have exploding 401k balances, but they have no clue. They have no ability to look under the hood. When you look under the hood and you look at what we just looked at, right, the Warren Buffett indicator, things are absolutely crazy. Look, one of the best stories ever, and you can Google this for yourself. Scott McNealy was the CEO of Sun Microsystems. He was the guy. Sun Microsystems was the AI of today that during the tech bubble burst. Sun was the NVIDIA of 1999, okay? After the tech bubble burst, he famously said that his company was selling at a price to sales ratio of almost 10. He was like, it was insane. It didn't make sense. That would mean I would have to give every penny of revenue, right, sales that my company made for 10 years, every penny of it back to investors as a dividend just for them to break even. And that's impossible because there's things like expenses, the company, but he was just using that. He was like, it was insane. Let's go out for fun. Let's go out and look at NVIDIA and see what their price to sales ratio is. Here we go. Yahoo Finance. This is how you do it. Okay. Type in NV. I'm sure NVIDIA will pull up because there it is. Okay. NVIDIA. And all right. Whoa. Price to earnings ratio. That's different, right? That's 65 to 1. Where's their market cap? $4 trillion. Let's go to their financials. And let's just look at their, okay, so we're at their income statement. All right. And we'll do quarterly numbers over here. Okay, so they had revenue of 30 billion. Wow. So they're at it. Is that 10 to 1? No. That's insane. No, that's okay. So but that's not annualized. So the trailing 12 months, they've had about 100 billion. Now I got to do some math. Hold on, guys. So they've got about 100 billion in revenue. That's TTM. That means the last 12 months. And they had what? 4 trillion? Let me pull you back here. All right. So let me do this quickly. 4, 1, 2, 3, 1, 2, 3, 1, 2, 3. That's billion, 1, 2, 3. Divided by 100 billion, I said, right? 2, 3, 1, 2, 3, 1, 2, 3. 100 million, 100 billion. If my math is correct, they have a price to sales ratio of 40. NVIDIA. That is insane. If that's correct, you guys can check me if I'm wrong. That is insane. That would mean that NVIDIA from right now for the next 40 years, if you bought a share of NVIDIA stock and they were to give you back all your money in dividends, it would take 40 years of them giving you every penny of sales that the company has. It's impossible for that to happen because, like I said, there's expenses, taxes, all that great stuff. And we are in the bubble of all bubbles in this market. And who else is saying it? So the Warren Buffett indicator, right? I mean, that's why Warren Buffett is selling stocks. I mean, look at that. These are numbers. These are real. Okay. Now let's go out to, have you heard of Nassim Taleb? Here it is. He's the author. Super respected guy. Collapse risk looms. Collapse risk looms as markets are the most fragile they've been in 20 years. Black Swan author Nassim Taleb says, look, I don't know what's going to happen. I could be dead wrong. Maybe we are in this new Wizard of Oz environment where the Fed can just magically instantly fix any issues that may or may not come along. But guys, I don't know. When you listen to the gurus, Ray Dalio, Warren Buffett, I mean, we are in a very risky, even Jamie Dimon from JP Morgan is talking about what a risky, crazy, risky situation we're in. So why did Nassim Taleb say this? He's focused on hedging against a market collapse. He said the market is flashing parallels to prior crashes, right? That means things like we just looked at, the Wilshire 5000 to the GDP, the Buffett indicator. These are flashing red signs, noting that it's the most fragile in 20 years. He pointed to risks in high debt levels, risks like high debt levels, and crazy Yeah, like we just looked at with NVIDIA stock prices in an interview with Bloomberg. But yet you'll have people like that Jim Cramer guy saying, buy, 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 buy. Just, and maybe he's right. Maybe I'm wrong, but I'll always tell you my truth. And my truth is I wouldn't put a penny into some of these tech stocks right now. It's insane. I'd put my money in gold and silver development producers in a second before I would think about going into some of these. But that's just me. I'm not a financial advisor. Though, listen to your financial advisor who may or may not have been selling tools out of a van. But anyway, I digress. Nassim Taleb, the author of The Black Swan, the famed treatise on the risk related to improbable events, aired concerns over the state of the market on a Bloomberg interview. The environment, he said, mirrors prior crashes, and he added that he was focused on preparing for such an event. He says, quote, "We have a lot of risk building up," the Universal Investment Advisor told Bloomberg on Friday. "I would say that my focus would be more on being hedged against an eventual market collapse because we're more fragile than we were probably at any point in the last 20 years, if not the last 30 years, he added. And he goes on and on and on and on about how right now, guys, we are in an environment like we have never been in this country. We are fragile. We have the reason really boils back to the U.S. debt clock, the amount of debt that the country has built up by sweeping problems under the rug, right? Because what did Jerome Powell do? What did Alan Greenspan do? What did Ben Bernanke do? Anytime there was a problem, what did they do during when the tech bubble burst? What did they do when the great financial crisis hit? Right? Well, we know one thing they did. They bailed out all the big banks, and nobody got in trouble. They got rewarded with record bonuses, but I digress. What did they do? Think about the tech bubble. Think about 2008 great financial crisis. Think about the health crisis that we all lived through back in 2020. I'll show you visually what they did and what they're going to do next time and how you can prepare yourself. I've got all the answers for you today here in Ron's basement. I'm glad you're here. Let's have a visual demonstration of what they will do. Here's what he'll do. Beep, 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 beep. Hello, basement dwellers. This is what they will do. Okay? They will do this. They will print. Uh-oh. Print. Okay? That's what's coming. And put that back in there. When that happens, it doesn't matter what they tell you about the dollar. Like we talked, this is great because what we talked about earlier, the dollar went up over the last 12 days, and gold should have crashed, right? But it didn't. Gold went up, right? Because when they're saying that the dollar went up, what they're comparing is this toilet paper. Imagine this, but it's euros. Imagine this, but somebody needs to print up some of this fancy toilet paper where it's not just $100 bills, but it's euros and it's yen. It's comparing a bunch of toilet paper to each other. And at the end of the day, what's going to happen is the gold and silver price will continue to go much, much higher. Okay, what about the banks? Look at this. This is very interesting what is happening with the banks right now. Have you noticed? Let me ask you this. Have you noticed banks closing throughout the United States? And are you scratching your head and wondering why? I wonder why Warren Buffett is sold all of his bank, or sold a lot of his Bank of America stock. I wonder if this is any clue to us as to what is going on. More major U.S. banks on course to close a staggering 1,000 branches this year. Here's the fullest list so far. So I want you to visualize your local bank and then visualize 1,000 of them, right? 1,000. And these banks, they don't build cheap buildings typically, right? They usually build freestanding, very expensive buildings. I was always amazed. Road I live on, Olive, there's like a bank on every corner. Okay. Some of them have closed. Now, one of them became a jewelry store that prominently advertised, we buy gold, gold's at record highs. But nonetheless, I digress. Why are 1,000 banks? Okay. U.S. banks have closed more than 700 branches in the first 9 months of the year, forcing thousands to travel further to access vital services. And I know it, like people talk about Bank of America, like you can't even really get to talk to a teller. I mean, it's becoming more and more difficult. But here, let's pull this up. Is your bank on here? Look at this. Bank of America, 132. U.S. Bank closed 100 branches. Wells Fargo, almost 100. Chase, almost 100. TD Bank, 52. PNC, almost 50. Citizens, I've heard of them, but don't really know them, almost 40. Capital One, okay. Guys, banks are closing at a real alarming rate in this country right now. What does that tell us about what's going on? Okay, what is that telling us? So when we look at the economy, right, and we look at the stock market crashing, we look at NVIDIA's unbelievable valuation. The Warren Buffett indicator is at record historic highs. Okay, the Warren Buffett indicator. He's known as being a pretty astute investor, right? Nassim Taleb is telling us, prepare. We are more fragile, delicate. And think about this. Think about this when it comes to the economy. They bubblegummed and duct taped over everything after the tech bubble burst, during the great financial crisis, during the health crisis of 2020. Print. They just bubblegummed and duct taped, which led us to this position that we're in today, where we have a unmanageable amount of debt in this country. And at the same time, we have China. We have countries don't want our debt. They don't want to finance the United States anymore. Think about that. How fragile this economy has become. Sure, we're still the world's biggest economy. I love my country, right? Look, right over my shoulder. I invested in a self-waving American flag. But, guys, right there, do you see that? There's an elephant in the room, right? The elephant, right? The national debt, the deficit. It's a big deal, and it's starting to have a real impact on the economy and the Fed's ability, right, to manage what goes on with the financial system. It's not a good situation. We are more fragile. And think about this. Have you noticed this? That like the events that happen in the world, there's two critical components to like big events, black swan type events. Number one, they are happening more often. Okay. And number two, because we've built up so much debt, right? The extreme level of the events, they're becoming more extreme, right? With all this debt, it'd be like you. I want you to think about this on a personal level. I'm going to make this about you. Okay. Let's say you have $100,000 in debt. Okay. You got yourself into a little hole, right? You have $100K in debt total, and you're paying 4% interest. You're paying about $4,000 a year in interest expense. You are not getting anything for that $4,000. I hate that. You know that. I digress. I think foundation number one that a person should work for in this world, debt is slavery. Okay, debt, in my opinion. So, but nonetheless, you got $100K. It's about you. You're paying 4%. You're paying $4,000 a year in interest. If that goes from 4% to, let's say, 8%, well, now you're paying $8,000, and that stinks. But you know, you're a hard worker, blah, blah, blah. You can, oh, I got to talk about the retail sales numbers. This retail sales situation is going to blow your mind. We'll get to that next. But interest rates go to 8%. Now you're paying $8,000. Not that big of a deal. Okay. That was the United States back in 1970s. Okay. Now, today, let's say you and your honey bun racked up, let's say $800,000 in debt. And that's really the equivalent of what our country has done. Now you've got $800,000 in debt and you're paying 4% interest. You're paying $32,000 a year. That stinks. That's a bummer, right? That's a real bummer. 32 grand a year, but you can still manage because you're a hard worker and you're smart. But guess what? No banks want to loan you money anymore. Nobody wants to give you any money. And think about this, at 800,000, if that interest rate goes from 4% to 8%, now instead of 32,000 a year, you're paying 64,000 a year. And you're like, I can't do it anymore. And the banks are like, we aren't giving you any more money. And you can't even make your interest payments. And that's the situation that the United States is headed toward if we don't watch it. Okay, so let's go back out and check. Come on, gold and silver. It's not going to happen every day, guys, but a lot of days. We're going to do an update here. Last time we checked, silver was down a penny. I got a feeling it's going to be down like a quarter or something. Still down a penny? Let's see here. Okay. Well, hey, so silver's hanging in there. 30. Wow. Gold is up $17. $26.91. So this morning, temporarily, we got great economic news. Congratulations, America. No, the stock market's not going to crash after all. That guy, Ron from Ron's Basement, he's crazy, right? We got great good retail sales numbers. Let's, where is it? Is this it? Yeah, here we go. This is great. This is humorous. You're gonna get a good laugh off of this one. From Reuters, U.S. retail sales increase solidly in September. Okay. Oh, yeah. So that means the Fed is not, the economy's strong. They can't cut rates. That's gold and silver stink. Well, okay, we talked about that. But let's have a brief discussion about these retail sales numbers. Okay. U.S. retail sales increased slightly more than expected in September, supporting views that the economy maintained a strong pace of growth in the third quarter. Retail sales rose 0.4% last month after an unrevised 1.1% gain in August. The Commerce Department Census Bureau, we know they're real accurate, said on Thursday. Economists polled by Reuters had forecast retail sales, which are mostly goods and this is the key, the red part, not adjusted for inflation. They forecast that they would rise only 0.3%. So retail sales beat. But the key here, guys, not adjusted for inflation. Let me say that one more time. Not adjusted for inflation. So they're trying to tell you that retail sales were great, but we forgot to factor in that we got this thing in this country called inflation. Like at what? I mean, it's probably 4%, 5%, but officially at 3%, whatever it is. So retail sales went up. The economy's strong. Let me make another quick, very easy example for you to understand. They're not adjusting those numbers for inflation. So the number nominal, that's the fancy way to say it, on a nominal basis, yes, measured in this paper. Woo, hey everybody. Right? It's the daily visit from the flying dollar, the unicorn fart dust, fantasy dollar. In fantasy dollars, retail sales went up. All right, the economy's strong. Hey, we're doing great. Blah, blah, blah. But in real, if you adjust that for inflation, I would say they went down. Let me give you a simple example. Let's say the whole world, all the retail sales were at the dollar store. Okay. And last year, when everything at the dollar store was $1, you went in with $5. Okay. You got 5 things. Some candy, I like sprees. What else? What do you like at the dollar store? I like spree, the candy. They got these little bean things. Anyway, I digress. and toothpaste, and it's a good place to buy shampoo. White Rain, that's how I get this hair. Anyway, you got $5. You go to the dollar store, you get 5 things. That's $5 of retail sales. Well, during the year, because of inflation, the dollar store raised their prices to $1.25. So today, you go into the dollar store with $5, you don't get 5 things. You get 4 things. So you get 4 things, but it still costs $5. Do you get what I'm saying? Right? So, hey, retail sales would be the same under that very simplistic scenario, but the economy is shrinking. Okay? The economy is shrinking. I had another example. Okay, the economy, that's not a real number. That's a nominal fantasy dollar number, period. The economy is shrinking. It would also, another way to look at this would be like if you made $95,000 per year a year ago and you got a raise and now you're making $100K, but everything you were buying with that $95,000 a year ago now cost you $120,000. You didn't really get a raise. That's the difference between real and nominal numbers. Important for us to remember is they throw out these, what I think are BS numbers, especially with retail sales. You know, I mean, come on, man. And remember, the United States is a consumer-based economy. The other thing to remember with that is as that activity that underlines those retail sales numbers, as that continues to shrink, that means job losses. Okay. That means people lose their jobs, which means it's just crazy how they present these numbers to us. Did you guys hear about the Curial hoard? How about this? One of our viewers, Joseph, sent this to me, and darn it, wait a minute. We got to talk about this. Hold on here, guys. I almost forgot one of the most important parts of the show. Look over there. Bidenomics is working in the USA. 100% of people pay the inflation flat tax. All pay tax. That's not what I wanted. That was a great one. That's that's you leaving the coin shop before they realize that you gave them paper for silver. We got to have some laughs. There's my little friend, Mrs. That's me at the Comex. Okay. Hold on here. Okay. This is from Rude Awakening. He says that this is about when we talked about the gold price last year going to 2,500, right? And we got laughed at. I got laughed at. On December of last year, I predicted $2,500 gold by May. That pretty much happened. We got laughed at. We're still getting laughed at, guys. I think we can get $44 silver by Christmas. Laugh, laugh, laugh. All right. Don't make any financial decisions based on that. But I really believe that's the case. And Rude Awakening said this: to all of the naysayers, he who laughs last laughs loudest. Bam. 2024 to 2025 silver squeeze. Look, there's no guarantee that it's going to happen, right? We don't know for sure that we're going to have this unbelievable but I know it's going to happen. And I know that I could be wrong. So, but nonetheless, let the people laugh. I was attacked back in December of last year. You're a precious metals pumper. You're a this. No. I base this off of extensive research, right? All kinds of research. And look, there'll be a day when I'll say, I think silver is going to go down. I think if silver hits 44 by December, that it could pull back, right? But I'd like to see a pullback to about $38 in the early part of 2025. And then from there, prices could go much higher. I could see silver hitting that $60, $63 range sometime later in 2025. We'll see if I'm wrong, right or wrong. Nonetheless, wouldn't this be nice? Hold on here. Wouldn't this be nice? This came from our subscriber, Joseph. And look at this. I had no idea this even existed. The Curial hoard was found near Curial, is the largest treasure trove ever found in Denmark. It consisted, somebody found 81,000 silver coins. buried in 2 iron pots, and they date from 1365. Okay. Think about that. 81,000 silver coins from 1365. Most of the hoards now on display, blah, 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 discovery. The carryall hoard was discovered in 1867. I want to talk about these dates. When a local farmer was plowing his fields, why do these farmers, they always find all this silver and gold? His plow hit one of the 2 iron pots. He was probably like, darn it, what happened? You know, my plow got screwed up. Hit one of the 2 iron pots. He found the other pot shortly thereafter, and then they paid him for a little bit. 81,000 coins. Okay, so think about this. Wait a minute, it said somewhere, I think they were German coins. None of the coins. Okay, most of them were German, says down here. But I want you to think about this. These coins were minted in 1365. What is that? About 700 years ago. They were discovered in 1867. Guess what? Those coins, right, pretty much were worth the same thing when they were minted in 1365, when they were discovered, what is that, 150 years ago in 1867, and today, right? Silver, everybody talks about gold, and I love gold, right? I'm a big fan of gold. Gold holds its value. Gold. Silver does the same darn thing, right? Whether you were the guy that buried those coins in the year 1400, whether you were the farmer who discovered them in 1867, or you're holding them in your hand today, one of those 81,000 coins, it has the same value, right? It's going to buy you a week's worth of food. And I guarantee, right, in the year 1365, that one of those silver coins would buy a week's worth of food, nutrition for somebody's family. And that's the same case today. Hey, thank you for being here. Thank you to the moderators, Jake from Jake's Custom Parts, Big Tim the Silvershire, and Annie Oakley. Thank you to Susie. Most important, thanks to you for joining me here in the basement. Okay, you are very important. This does not exist without you. So think about how important you are. You're important to me. You're important to your fellow basement dwellers here in the basement. Your ideas matter. Your thoughts matter. Leave a comment in the comment section. I need to say thank you to channel sponsor First Mining Gold, Canadian gold developer with 2 multi-million ounce projects in Canada, gold in the ground in Canada, and Fortuna Mining. They have major silver and gold operations in Latin America and major gold operations in West Africa. They have gold and silver in the ground, and they're an active mining company. They're actually harvesting, pulling that gold and silver out of the ground. You can learn more about them at their respective websites, as well as Pimbex, Pimbex, online bullion dealer, sponsor of Ron's Basement. Thank you for being here, guys. Okay. And I will see you soon. Thank you.